Hi, welcome to my YouTube channel. This is the long awaited video. Finally, I'm doing it. So if you're new to this channel and you see me for the first time, my name is Welt. I'm a trader, drummer, and a mentor in the making, turning rhythm into energy and chat into profit, documenting purpose, passion, and self-mastery. Let's go. So in this video, it's for beginners. Uh, my little of trying to connect with you guys that have been asking that you want to trade forex but you don't know how to go about it. So this is just my little contribution, my little value to you guys, to be able to start your journey in this amazing market. All right, so there's no need to be scared. This is beginner friendly. I'm going to take it very simple and precise as I can. So but I'll be using this book called The School of Pipsology, one of the books that got me started some few years ago, and the book is very resourceful and very helpful, and I want to teach from the book. I already dropped in my WhatsApp group for those who are on the group, and I believe they've been going through it. So what will happen now is this: I'll just do some explanation from the book and just get into it. So you want to ask yourself first, the question every beginner asks: what is forex? Forex means foreign exchange, right? The FOR, then EX is exchange, FOR for foreign. Okay, so what I mean by this, what do I mean by that? Foreign exchange. So for example, if you travel from the US and you came all the way from the US to Nigeria, you will be coming with US dollars, right? You'll be having US dollars as the currency you came with. So in order for you to spend in this country, in Nigeria, to be able to buy stuff, you need to exchange your currency, which is the dollars you brought with you. You need to exchange it back to Naira. You need to, go to the exchange center and change your dollars to Naira so that you can spend. All right. So basically, that's forex. Exchange has been made. You exchange your dollars you exchange your dollars to Naira. In that case, you bought Naira and sold your dollar. So that's forex. In simple terms, layman understand that that's forex. But in this generation now, currently, you don't need to go to a physical location where you can buy physical money to hold in order to trade. Now we trade electronically and using platforms and brokerage, which I'll be sharing later in the video. So this is just the part one of the course. So what is forex? Forex is simply foreign exchange, where we come to change money and anticipate for profit. So when you're anticipating for profit, that's called speculation now. So what do I mean by speculation? Now I will buy dollar and expect it to rise in value. That's speculation. So whichever way it goes, I think I'll be fine as an investor. But my primary aim of buying the dollar is to wait and see if it will appreciate in price. Then I'll make money off of the difference. Okay, so that's forex. That's still exchange. You understand? But this time electronically, using a platform and a brokerage firm to do that. So in this course now, we'll be going through some of the elements, the most primary elements that you need to stay to be grounded as a beginner. All right. So first, you know what is forex. Now you have an idea what is forex. Foreign exchange. So let's read from this book and let's see what they can say. All right. So they say if you have ever traveled to another country, you usually have to find a currency exchange booth at the airport and then exchange the money you have in your wallet. If you are a dude, or purse if you are a lady, or man purse if you are a metrosexual, into the currency of the country you are visiting. Just like I said, you came all the way from US, you came with dollars. In order to be able to spend in this country, you need to exchange your dollars to Naira. So that's the same thing they're saying. So you go up to the counter and notice a screen displaying different price exchange rates for different currencies. You find Japanese yen and think to yourself, wow, my $1 is worth 100 yen. Like what is going on in Nigeria now? If $1 is equal to what? Almost 1,600 or 1,590 something. Okay, I don't really know the current the accurate price as of today, but I think it's within that range. So you bring in like $1,000, you see that you brought a lot of money, but the moment you exchange it and you start spending in Naira, then you see that the inflation will cut almost all your money, and before you know it, $1,000 is gone. Yes, it might sound big, but once you exchange it back to naira, there's nothing left there again, because the inflation in the country is so much and the naira is devalued. Okay, so you literally don't really have much to play with. So let's go. So and I have $10. I am going to be rich. You're saying to yourself, just they are saying hypothetically now. This excitement is quickly killed when you stop by a shop in the airport afterwards to buy a can of soda, and all of a sudden half your money is gone. Same thing I was explaining. Ironically, that is the power of inflation. It devalues the currency. Everything is on the high side. Okay, so when you do this, you have essentially participated in forex market. You have exchanged one currency for another, or in forex trading terms, assuming you are an American visiting Japan, you have sold dollars and bought yen. Same thing I said. You came into Nigeria and you brought dollars. You exchanged to naira. You just bought the Nigeria naira and sold your dollar. And now that you sold your dollar, whatever happens to you in the market is none of their business, because you've changed to naira and inflation is on the high side here. So before you fly back home, you stop by the currency exchange booth to exchange the yen that you miraculously have left over. Tokyo is expensive, I'm just saying. And notice the exchange rate have changed. It is these changes in the exchanges that exchange rates that allow you to make money in the foreign exchange market. Same thing that we're saying. So we trade off of the fluctuation of the price. Okay, so let's go. So what is traded in the international market now, which is the forex market, the largest financial market in the world? What is traded? So you can read through this by yourself. They are just going into more depth. uh, like I said, I'll just be explaining some of this time just to make them clear for you. If you need the book, just click the link. There's a WhatsApp link in my description. It will bring you to my group, and you just request for the book and I'll drop it for you. Okay. So you say, what is traded? The simple answer is money. Money is traded. Money is traded. You say, because you are not buying anything physical, this kind of trading can be confusing. Yes, we are trading money for money. So you deposit part of the money into your brokerage account, and you trade from there, because they will give you access to the currency pairs, which we are going to talk about now. So thinking of buying a currency as buying a share in a particular country, kind of like buying stock of a company, you see. So what they are trying to say here is this: whenever you take interest in buying a particular country's currency, you are indirectly participating in their economy. Okay, so the economy of Nigeria is not really performing very well now, and you can see that our naira is devalued. All right, so in that sense, now anybody coming to buy anything in our naira is participating in our economy, because whatever happens in the economy will affect that investment that he has in naira, whether he bought the currency and hold, or he bought any asset in Nigeria. It's the same thing. Okay, so whenever you are planning to trade, as your journey progresses, you want to trade whatever asset you want to trade, just know that you are indirectly participating in their economy. Okay, that's what it means. So it's like I said, trading is not gambling. You need to have investors mindset. A sophisticated investor, an ultimate investor, won't just put his money out there out of emotion. Oh, this thing is paying more. Wow, this thing has a potential of doing 100x, and he just throws money at it. No, a sophisticated investor will do his research, do his analysis before putting one kobo on that asset. All right, he will have an idea of what will happen. There's a risk on it, right? But he knows that it is in his favor. Everything will line up in his favor before he will consider putting his money. For a gambler, nothing concern him. He will just blow through, put all his money there, and with so much emotion, and all of a sudden the money is gone. So when you are participating in forex, you are indirectly participating in the country's economy. Okay, so having said that, let's look at the currency pairs now. How are these currencies paired together so that we can trade? So he said, in general, the exchange rate of a currency versus other currency is a reflection of the condition of that country's economy compared to other countries' economies. What I've just explained. By the time you graduate from the School of Physiology, you'll be eager to start working with currencies. All right, pretty soon. So these are the major currencies. So these are the symbols you'll be seeing from uh, when we get to brokerage and trading view and all that. So you see USD, you see Euro, this is Japanese yen, this is the Great British Pound, this is the Swiss franc, the Canadian dollar, Australian dollar, New Zealand dollar. All right. So these are the countries. This is the name of their currency. This is just the nickname for each of those currency. All right. So now let's go to how they are being paired together. You understand how it makes sense. So here they say it is traded in pairs. The forex trading is the simultaneous buying of one currency and selling another. Currencies are traded through a broker or a dealer and are traded in pairs. For example, the euro and the US dollar, or the British pound and the Japanese yen. So these are they are paired together, the euro, the USD. Then this one is Great British pounds and the Japanese yen. Okay, so when you trade in the forex market, you buy or sell in currency pairs. So those are the pairs. So they are pairing two different economy. Technically, that's what it means, because the euro, which is the eurozone consisting of Germany, Spain, Italy, France, I think there are about 19 or 20 something countries. Is it 29? I don't really know the exact number now, but I think it's within that range. So all those economy paired together versus the USD, which is the American economy. So anything that is happening in any of this economy, you should be interested in it because you are investing in their currency. Yeah, so being a forex trader or coming into the financial market, it's not just about the euphoria or the excitement that you make a lot of money. This is a skill set on its own. This is a skill set on its own. There's a lot to learn. There's a lot to grasp. Okay, so you don't just show up with a false mentality, like a fallacy. It won't work that way. You just blow your money and then you get discouraged even before becoming profitable. So these are the currency pair. So just as we have major currency pairs, he said the currency pair listed below consider the majors. These pairs all contain the US dollars on one side and are the most frequently traded. So these are the most frequently traded that are most liquid. They have intraday volatilities and all that. So it's a Euro USD, USD JPY, GBP USD. So you can see as they are pairing all of them. You see, look at this one, GBP USD versus the US dollar, the Euro USD versus the US dollar, the US dollar versus the Japanese yen. So you see two countries, two economy. So whatever is happening in any of this country, you want to be involved. Okay, so these are the major: the Euro USD, USD JPY, GBP USD, USD CHF, USD CAD, AUD USD, NZD USD. So they have that. So we also have the crosses, the major crosses. So the currency pair that do not contain the US dollars, known as currency pairs or simply as the crosses. Okay, major crosses are also known as minors. The most actively traded crosses are derived from the three major known USD currencies, which is the Euro, the JPY, and the British pounds. So these are Euro crosses now, the Euro CHF, Euro GBP, Euro CAD. So these are all Euro crosses. They are not the major, they are minor pairs, but they are Euro crosses. So if somebody say Euro crosses, ask you what is Euro, which pairs are Euro crosses, just name all the pairs that has the Euro without the USD. So it's a Euro CHF, Euro GBP, Euro AUD, Euro CAD, Euro NZD, you understand? Euro AUD. So you just go like that, Euro JPY, they are all like that. So these are also the yen pairs, Euro JPY, GBP JPY, GBP CHF JPY, CAD. So these are all the pairs. These are things we'll be trading because each of them has their own charts, their markets where we'll analyze and we'll take trades. It's as simple as that. And everything will be done electronically off your phone or laptop, whichever one you have. Okay. So these are all, and we have exotic pairs. We don't really need this one to trade them, but just for knowledge sake, you can just read through and see what they say. Okay, so the next we want to look at is when can we trade this forex market, because the market is open 24 hours every day for 5 days, Monday to Fridays. So in this whole 24 hour, are we saying we'll trade all the 24 hour? No. There are strategic time which we have to show up. There are strategic time where the market has much volatility, much volume, much liquidity. Those are the times we want to take advantage of so that we can make quick money and know what we are doing. So let me take you. So you can read through. These are all information that will help you, but let the video not be too long. I would cut out all this and I'll just go straight to the main point. So in your own leisure time, just read through. But believe me, whatever I'm explaining to you is exactly what you need. Okay, just for more information, a deeper knowledge of it, you can read through this on your own time. Like they say, different ways to trade. You can see spot market, futures, option. Just go through them, alright? So, but I'm giving you the real juice. I'm just cutting out the noise to give you the real juice. So now, let's go to time zone so that we'll know when we should trade. Okay. So yes, all right. So you can read through all this. These are sweet information that you like, but for the video sake, it's a course, so I don't want it to be too long because I'll definitely do part two. You understand? And part two will cover some other information also. So don't worry about that. Okay. So when can we trade forex? When can we trade forex? So this is the trading section. You say now that you know what is forex, why you should trade it, and who makes up the forex market, it's about time you learn when to trade. So we want to learn when to trade it. So let's look at market hours. When is the best time to show up in this market? Before looking at the best time to trade, we must look at what a 24-hour day in the forex world looks like. So the forex market can be broken up into 4 major trading sessions: the Sydney session, the Tokyo session, the London session, and the New York section. Below are a table of the open and close time for each session. Okay, so let me break this down. So number one, I have the Sydney open, Sydney close, which starts by 6 p.m. EDT and 3 a.m. EDT. Now I'm in Nigeria, so I'm dealing with the GMT. So at our time here, it will be 10 p.m., which is night here, and it will last from 10 p.m. to 7 a.m., which is morning here. So the Tokyo session starts from 7 p.m. their time, but in GMT here, it will be 11 p.m. same night, and it will close 4 a.m., which is 8 a.m. GMT here, which is morning. So you can see that this 2 session doesn't favor our time zone. All right, I'll be sleeping by 10 p.m. now, or I'll be resting or something, or I will just catch up with friends. 7 a.m., yeah, I should be waking up by then. I should be off my bed by then. So 10 p.m. doesn't favor me. I can't be up from 10 p.m. trading till 7 a.m. What am I doing? Which means I didn't have any sleep, of which it won't be good for me. And Tokyo's open, the same thing, 11 p.m. I should be sleeping. Then 8 a.m. I should be waking up. Then maybe it's that I'm going to sleep. It doesn't correlate with what we have here now, our time zone. So we want to look at the London open. London open 3 a.m. EDT, but it opens 7 a.m. Good. This is what I want, because in Nigeria here, by 7 a.m. people are already going to work. Students are going to school, and all that. Business have started for the day. So I also want to be trading, like waking up that time or even earlier to prepare for the 7 a.m. So London closes by 4 p.m. Nice. So I can be trading from 7 a.m. my morning till evening. All right. I'm not saying that's the case. All right. We'll still go deep into sessions and how it relates to the kind of trading style you are doing. So the New York opens by 12 p.m. our time, 8 a.m. EDT, but 12 p.m. our time here, and New York close by 9 p.m. What a perfect combination. What a perfect timing. Tell me, there's no better place to be to trade forex than Nigeria, because the time zone aligns perfectly well. See, just imagine taking advantage of 2 session, the London open close and the New York open. Just imagine, these are the 2 biggest market movers in the world, the London and the New York. So you are privileged to be up to be on your chart looking for trading opportunity 7 a.m. and you also be there till the New York, which is the American market, opens and meet you still in the market by 12 p.m. and you still take advantage of that till 9 p.m. Wow, no, come to think of it, even if Nigeria doesn't offer you anything, it offers you good time zone to trade if you know what you're doing. All right. So the best time for us to trade is 7 a.m. till 9 p.m. But you won't sit on your chart all day, maybe because of the job and all that. So if you have other jobs you are doing, or you want to do swing trading, you will not always be on your chart. So I'm just telling you the circle, like the session, the leverage of time you have to trade. So remember, I want to trade when big banks are moving this market. Like if you read, if we go back and you read where That is the market makers, display the market makers, foreign retail brokers, people that move this market. You want to be trading when they are also trading, and you want to stop when they are not trading, okay? Because they are the market movers. So if the market is not moving, you can't do anything. So mostly Sydney and Tokyo session midnight, nothing really happens relatively to the pairs that you trade in, as you understand. So there are some pairs that don't move, that does not move well in Tokyo and Sydney. There are some that move very well, perfectly well on the London and New York session. So those are the pairs you also want to be trading at that time. So you don't want to be trading in Sydney or midnight or something that does not really align. You will not have that liberty to really take advantage of that market, because it will somehow be choppy, it's not moving anywhere. So we want to take advantage of the London and the New York session. Now let's look at the pairs that move at this session, so that we can take advantage of it. So good. So now I say, but remember that when the US shift 1 hour back, Sydney actually moves forward by 1 hour session. So that just reminding you in case of, is it daylight saving? Is it daylight saving? I don't know. Somebody remind me on the comment section, please. I will appreciate it. So let's look at the average pip movement of the major currency pairs during each trading day. So what pips mean is this: is the fluctuation of price. So if, for example, I made an example of Nigeria currency being at a 1,600, all right? So if from 1,600 we move to 1,700, that is 100 difference in margin. Okay, so that's a pip. Now that's a 100 naira, right? So that movement from 1,600 to 1,700, that's 100 pips. So that's what it means. Okay, so now they are showing us that each of those currency pair, as regard trading session, these are the pairs and these are the numbers of pips that move in each of these sessions. So you take your time to look at each of these pair, look at the session that they move more. So the Euro USD Tokyo session, it moves 76 pips. In London session, it moves 114 pips. In New York section, it moves 92 pips. Can you see? So the GBP USD moves 92 pips in Tokyo session, it moves 127 pips in London session, and in New York session it moves 99 pips. Can you see that the Tokyo session really don't deliver that much pips? It doesn't deliver much pips. The London and the New York does that. So the USD JPY delivers 15 pips, 51 pips. Tokyo session, London session it delivers 66 pips, and New York session it delivers 59 pips. So these are the information right there, okay? So you can go through it yourself. So just look at it. So from here you should have idea of what pair you should be trading. You understand? So take your time to do that survey by yourself. What pair really fit? Having the idea of number one, trading session; number two, the kind of pair; number three, which session the pair move more. All right. So do that for yourself, and by part two, I'll ask you what you found out. Okay, what you find out. So the Euro USD, same thing. They're just reminding us here. Of the movement. So per Euro USD moves 76, in Tokyo GBP moves 92. They are just breaking it down. Say which pair you should trade. Say since the Tokyo session is when news from Australia, New Zealand, and Japan comes out, this presents a good opportunity to trade news event. Also, there could be more movement in yen pairs. All right. So you see. So mostly Asian session deal with all these pairs, AUD and all that, but the Euro USD, GBP USD, AUD USD, they move well in London and New York. So for me, I want to take advantage of the two sessions, which is the London session and the New York session. Okay, to really take advantage of, because the two of them overlap. So I have advantages, many advantages there. Okay, I have so much advantage there, plenty of advantage there. So they are still reminding us these are the pairs, this is London session. So you can take your time to study this table, and you find out which pair moves very well, which pair you really want to trade. Okay. So they are still telling us about the sessions, when it starts, and market players that are involved in those sessions. So take your time to read through. They are still showing us pairs and New York. So they are breaking it one after the other. for us now. Session overlap, same session. Just read through by yourself and you see all the information right there. Okay. So now let's talk about quote. We talk about currency pair, right? How they are being paired together one after the other. All right. So we talked about GBP USD, Euro USD. So the first currency here now is the base currency, and this USD is the quote currency. Okay. So if we say buy GBP USD, we mean that what that means is this: please broker, I want to sell USD and buy more of pounds because I've sensed in my analysis that GBP is going to rise in value and the USD will drop, will depreciate. Okay, so I want you to buy more of pounds for me and I will make money from the differences in people movement. So the current price of GBP USD as a pair is 1.51258 as of when they wrote this book. So if this price moves up, maybe go from 1.5125 to 1.65 whatsoever, you are making profit because you bought, which means pounds is really appreciating in value. But if you put a buy order and the price start dropping, you are losing. Okay, you are losing money. So that's what it means. So the first one by the right is the base, and here is the quote. So let's read what they have. They say currencies are always quoted in pairs, such as GBP USD or USD JPY. The reason they are quoted in pairs is because in every foreign exchange transaction, you are simultaneously buying one currency and selling another. Here is an example of a foreign exchange rate for the British pound versus the US dollar. So same thing I just explained. The first listed currency to the left of the slash is known as the base currency, in this example the British pounds, while the second one on the right hand is called the counter or quote currency. Same thing I just said. So when buying, the exchange rate tells you how much you have to pay in unit of quote currency to buy 1 unit of the base currency. In the example above, you have to pay 1.51258 US dollars to buy 1 British pound. When selling, the exchange rate tells you how many units of the quote currency you get for selling 1 unit of the base currency. In the example above, you will receive 1.51258 US dollars when you sell 1 British pound. So it's just the same thing. Okay, it's same thing. So we'll go into deep examples as we go further. So this is just an introductory part. Okay, so I want you to really digest this video, watch it from beginning to end, then write down your questions, put them in the comment section for me, or join my WhatsApp group. I'll leave the link in the description. Then you can engage me in the WhatsApp and put down your question. Then in the part 2, I will make sure I attend to the question as I start teaching in the part 2. So what is it, long and short? It means long means you want to buy. Say I want to long GBP USD. What you are saying is I want to buy GBP USD. And when you say short, meaning I want to sell GBP USD. So that was it means. So just remember, long equals to buy and sell equals to short equals to sell. So same thing. So this is bid ask price. So what will happen is this: I would like to stop here so that I don't bombard you with too much information, so that you can have time to really digest bit by bit. Remember, I'm not going anywhere. We are not running anywhere, okay? So we'll take our time to study together. We'll take our time to really look at this together. So I will stop here. The video is like 28 minutes long, almost 30 minutes. So I think I should stop here for now. Then I will do part 2 and also upload. So you just follow like that. What you do for me now is you subscribe to the channel, turn on the notification icon so that you'll be notified every time I post the new videos, which will be part 2, part 3, part 4, like that, until we come to a point where we can all analyze the chart together. So please do well to stay tuned, and please join the WhatsApp group. The link will be in the description, and plus my recommended broker. You can sign up and just wait like that till when you are comfortable to start trading. Okay, so I will stop here for now. I will stop at this bid and ask price for today. Okay, so subsequently I'll come back again and we'll start from here. This is bid and ask. This is where we'll stop. So I'll just go like that again. So please take care, and I'll see you in the next one. Oh, thank you so much.